Alrighty, Doc here from North America. Good morning, good afternoon, and good evening, and it is TGIF. Thank goodness it's Friday. Hooray for us. A shortened week, but a fun-filled week. That's the only way I can look at it. Let's get to the chat line and see what is going on. There it is, live, Doc. And so, let's see what we got up there. There's the dollar index. Oh, moving down a little bit. Excellent. Let's see. Let's see what the Swiss looks like on J4X this morning. There is Swissy right there. Skippy. There we are. And there is Moses. Hey Moses, how you doing? There you can see it's moving down, so that means that the dollar is moving down. Also, interest rates just went up. Okay, yeah, what's wrong with that picture? And so, when interest rates go down, the dollar's going up. Okay, and then when interest rates are going up, the dollar's going down. Okay. Hey, Alan, how you doing? It just is amazing. The fundamentals are just so much off the tracks. You know, they just don't even make sense anymore. Everything is hinky. Everything is hinky. I think that's the way to look at it. Hinky. Thank goodness for quantitative analysis. And I guess the market's becoming more simplistic because of people being paranoid, or I don't know. I mean, well, there's no exchange floors, so I mean, what happens is that there's no opposition. I was saying that before. Let's see if we can get our charts up at the same time. Minimize there, and that's a bad thing, you know. Not having all those voices, you know, competing, you know. Free markets, free people in the end, you know. That's really the way it rolls. Let's see, Doc, FX option for dollar yen holding in place till 10 a.m. Is that when it is? Let's see. Well, let me think. What's at 10 a.m.? Is there? It's not an expiration, is it? Or is it? Is there a big open interest in Japan, or how's that work? Oop, I keep on losing the volume. Yeah, I'm curious on that one. Usually, what happens is that people look at the open interest, and then they see a product sitting at the largest open interest of options, and automatically assume that that is the center point, which is okay. You know, it's a good way of looking at it. Let's get to 2, right there. There it is. And let's see. Let's go to that. And then let's open up the currencies like so. Dookie day and week right there. So that's an interesting way of always looking at it, as far as I'm concerned. And you know, I mean, it's a good way of trying to understand how options influence marketplaces. You know. Now you can see here, we're holding on. The dollar index, the ETF, is up a little bit today, or flat, and it's holding on here. And so this had a red and green dot at one point. That's why it didn't go into the sell. That's why, oh, now here it went into the sell. That was fine. Let's do that. Like that, and then back into the buy here. I don't think it's here. See what that is. 0, 0, 0, and 0, 0, 0. I guess we could legitimize it right there. There you go. And then we didn't put one here. I remember that because it was red and green. Let's go back to the chat line. There we are. Expires about $1 billion worth of open interest. Okay, that makes sense. Yeah, you know, 1 billion in option open interest is always something important. There's no doubt about that. These markets have become so much more aggressive and wild and so forth, solely because of the money supply is so enormous now. And with the enormous money supply, you have to have enormous positions. It's pretty much the way it rolls. Let's see, let's move that up a little bit more like so. And over. Right, like that. There you go. That's seeing it pretty decent. There we go. And then get the J4X functioning right there. Ooh, there you go. You can see that. That's the action we've been seeing. Let me do that again. You can see the Swiss has been going up since we went into the weekly buy signal. I'll show you that right there. We can do that with this too. You can see that's where the weekly buy signal is. Why don't I just make that thing go zooming up. Let's see, where's Mr. Mouse? Or it could be Mrs. Mouse, you never know. Or Ms. Mouse. What do we want to do? Cancel. There it is. Ever since it went into the buy here, the weekly buy right here, it's gone zooming up. Right there, like that. Ooh, that's not good. Let's fix that. There we go. Whoa, look at all those. The cavalcade of. There we go. All right. Where are you? Let's just throw one up like that. There we go. So then we go like this and find the Swiss. There it is. So since we've climbed into the buy, is that the Swiss? I thought I just made it bigger. Yeah, that's the Swiss. So since we've gone into the buy, right there, extend it up that way then. There we go. Now that's interesting. Okay, so the daily went into the buy here, then the weekly, and then the weekly joined in, and it's been pretty sideways, really sideways up at best, and now they're actually challenging the center point, or the base, the starting point of that weekly buy. So you can see it being held in the 1 hour chart. I bet it's probably locked in. Let's see what we can do about showing that up on the screen. Let's see, where do I go from there? Let's see if we can find it. We'll find it for you. Let's see, I feel a little foggy today. I only had one glass of wine last night. I don't know why I feel foggy. Let's see. Hourly chart. I know we have an hourly chart parked around here somewhere for you. Maybe it's in here? No. But what we can do is we can create one. Where should we put that? Maybe it's over in here. Maybe we have an hourly chart parked in there. Let's see. No hourly charts parked there either. We had one parked around here somewhere. All right. Either way, we'll go. Oh, maybe here. No. All right. Let's do this. It's a developed one. So we'll make a copy of that. I'm here. I'll show you something I'm playing with. I haven't looked at in a while. It's always fun. Doc's always doing research. Let's see. Let's put it right there. File. Paste window. And let's put in Yenski. $yen. Cash. USD, not OSD, USD, yen, settings, you say an hour, okay, we'll put an hour in there, 1 hour, there we are. See how this looks. Here it comes, and then I'll explain to you that other tool I have down at the bottom. Oh, no, I understand. I got that. I understand that. I'm just being foggy today. Okay, so that's the hour. There's the 1 hour. Let's shrink that down a little bit. There we are. And let's put the fact check spreadsheet up too. Don't ask me why. I've been up for like 4 hours now. There we go. Move that over. I was doing lots of manual labor yesterday. Maybe that did it. Out there in the sun and the heat, and it was 92 degrees Fahrenheit, which is, what is that? That's 3260. I guess that's like about 30 some odd degrees. 32 minus, yeah, so 60. So it's like 30, what's that, like 33 degrees Celsius, something like that? I was doing manual labor. I always do. I try to do a little manual labor every day because I'm in front of the computer so much. Let's see. You can see there, I was digging a ditch with a shovel. Well, I had a backhoe too. Matter of fact, I think I have a picture of it somewhere around here. So you can see here, yeah, this is what you're talking about, right? The sideways action. It's been locked in since like noon yesterday. They're just waiting around for the expiration today. You can see they brought it down to here. You know what's kind of interesting is here you go, like this. It's almost, right there. It's been riding along, went to the lows, went to the highs, trying to fall back down again. So the 110 strike price, you're saying, that would make sense. Now, I'll show you what I've been playing with of late. They're both gas line 5s. Let's see if I can bring this over. I'm not sure why we don't see it. Why doesn't it say it? Okay, so they're both gas line 5s. And this is a gas line up top. This is a gas. And you see the difference is that, you can see, we can make that a white line, I guess. That'll help you relate to it a little bit better, probably. Notice both the same identical white lines. The time manifolds are the same. And then what happens is instead of a crossover, that's why I call it the gas lines, instead of crossover where the white line goes plus and minus and the histogram goes plus and minus, there is no histogram. And instead, it's a 2 standard deviation of the time manifold. So there's 2 different time manifolds here. And so when it pierces that and starts to come back up, it starts to insinuate, especially coming through here, it starts to tell us that it's rallying back up again. And then especially going to the extreme here, that's the warning of it. And then you can see it bouncing off of that, whereas the histogram does not bounce off of it. It breaks it. In this case here, it bounces off of it. It does that a lot. It does a really good job about that. It's kind of fascinating. Let's see if we can widen this. Like that. There we are. And so then it kind of is it's a way of, it's actually, I think the gas really does move ahead of the gas line because we're doing a standard deviation of plot 1. And in this case here, we're doing a standard deviation of a standard deviation. And that is the time manifolds. And so the time manifolds are even more interesting. Kind of like that's where I got kind of a Gauss kind of philosophy. The mathematician Gauss. Oh, you can't see. Sorry about that. Just throw something at me like a sock or something. Throw something at me. There it is. So that's how that all works. So the one above is the gas line where the histogram is in, and the white line, and then you can see that I guess I could do this, is that the time manifold, we can go like that instead, so you can relate to it better. Let's see, like that. There we are. And like that, and then why don't we do this? Take this one and turn it into that and that. There we are. And so that's I always find that to be fascinating, and lately I've been paying attention to it more. I think I'm going to make it a solid line. There we go. Because without a doubt, the gas, I think, is ahead of the gas line. same math. The only difference is it has two time manifolds, and one is a 2 standard deviation from the first 1 standard deviation, which is fascinating. Whereas the histogram is a 2 standard deviation from the white line, which is a 1. So it's kind of fun, and you can see how it acts. You can see, you know, like here, it makes it very clear as it's stalling out in this area here, you know, and how it brings it back to the 0 line. They both follow the 0 line. Let's go like that. There we are. So I just thought, you know, I've been kind of watching both of them. I think they're both very fascinating. But the way the white line reacts to the second time manifold is what catches my eye. What is that? 29 views, steamed 19 hours ago. Trade Classico Dairo. Looking at what was broadcast. So that's looking at the open interest, Alan. I see. That makes sense. That makes very good sense. That's where it parked itself, right on the most open interest. The 110 strike. Correct? 110 strike? That's where all the open interest is. That's expiring today at 10 o'clock. We'll see if how Alan responds to that. All right, while we're waiting, let's go over to the euro. Oh, let me do this. Let me save this. Save workspace. We'll keep it parked in that particular chart folder. Save as. This way we can always go in there. And like I said, I've been experimenting a lot. You can see here with this one. I've got them in my intradays now. I'm watching them the way they act on the intradays. Thank you, Alan. I like it the fact that you follow those open interests. I think that's really good. I'm glad that we can talk options. I like that. That's very good. Because most people are kind of pushed away from that. Middle age comes in here too. Middle age is a big active options trader also, which is nice. My math was built to adjust my deltas to my option positions. Well, no, let me rephrase that. My math was to deal with the Higgs boson, but I used it, and my formula, I used it to adjust my option delta. That's what it was. Back in the early 80s. That's how I realized, wow, this thing has more components than I realized. Then I found it, real life, friction world. So that's a good thing, not a bad thing. Not theoretical world. All right, let's move that off because that's my new toy of the last couple of days. And I just thought I'd show it to you. Now, where was I? Okay, let's jump over to the cable because I saw the. Let's do euro. Look at the euro. The euro is trying to climb into a daily buy today. Weekly is still well below the time manifold, and same thing's going on with the cable. The cable's trying to jump into a buy too. Last I looked, that red dot was gone, and with it at the high of the day, let's give it a refresh. See if it wipes it out when I do the refresh. No, it didn't do that. So it's trying to climb up into a daily buy. Both of them are. And let's see, interest rates are they're rising, right? So American interest rates are rising at the moment. And so because they're rising, people are buying foreign currency instead of buying American dollars. Sure, that makes total sense. Okay. And so you can see these two are trying to lift up, and the dollar is kind of sideways. The ruble's been doing that run thing here. Now it's starting to go down. Yeah, of course, the American interest rates are rising, so they're buying dollars. Of course they are. Yeah. They're not buying dollars, they're selling dollars. That's what they're doing right here. They're selling dollars, and they're doing the same thing in British pounds and euros. So it's definitely a hinky situation. As we sip water. There we go. It's too early to have an adult beverage. Let's see. And what's interesting about this one is look at the ruble. It's going to go into a weekly buy at the same time, just as it's starting to go into a daily sell. So we'll see if this is just profit taking or if it's another trend shift. Now we'll take a look at Turkish lira, right there. Turkish lira just cannot get out of its own way. It's going sideways down, but in a weekly buy, so it's stuck in that neutral area. And then, let's see, let's go, where do we go from there? From there we jump over to Canadian, then we start to look at gold and oil and so forth. And you can see here, Canadian went into the weekly buy here, daily buy back in here, went all the way up to there. Then we went to a sell here. I guess we don't have those lines in there. Those lines supposed to be in there. Sell, and then sell there too. And then buy again right there. Let's change those colors. Right there, okay. So the Canadian's been going up in the weekly buy and the daily buy, and it's holding up pretty well up top there. No real weakness kicking in yet. Now what we do is one of the things that was torturing us for like 4 days was oil. Remember that? I was like, just trust it, don't fight it, just trust it. And sure enough, this crazy sell with the product going up for a couple days, and it being in a weekly buy, but you couldn't get long, so it had you sitting out for this whole move. And sure enough, it went down and made lows. Now we're trying to get into the buy right here. That red dot wasn't there earlier. These red dots keep on going in and out. I can't wait to see that one disappear. When that goes into the daily buy, I have to assume we're going to go see the high 70s. Just have to, at least there's going to be an up move, that's for sure. The odds are 8.5 out of 10 that it will be. And so all that noise that we saw in that circle up there was the math saying to us, be careful, don't be long, be neutral. And sure enough, what did it do? It stayed neutral and life was okay, you know? Exactly. So there's one of those classics, you know, that the math screams from the top of its little lungs. Stay neutral, stay neutral, stay neutral. And the aggressive trader is like, oh, hell no. The smart trader is like, yes, of course, I'll listen to you, because you seem to be ahead of the curve all the time, or at least most of the time. So that's where we're at. All right, now let's take a look at gold. And there's gold. And gold's been sideways for 4 days, and a sell for 4 days, and a weekly sell for 4 days. So the world is not coming to an end, and this product refuses. Oh yeah, check the Aussie out. Aussie went into a daily sell a couple days ago. Right there. What are they doing to Oz today? Lifting it up, that's for sure. Let's give it a refresh. Control R. There. It's looking good, isn't it? It's close to the highs of the day. And look at that. The weekly is trying to turn into the plus. What's up with this grid? Format window. Let's find what's going on with this grid. Now, why did that not do it? Let's try that again. Format window. Solid lines. What's up with this malfunction here? No, not that. And then let's make it black. Let's see what happens. Now why is it doing it that way? Why is the grid being so weird? Oh, that's showing session breaks. I don't care about session breaks. I just want to say, now, why is it giving me session breaks? See if we can straighten this out, because I want to see the format window. And let's see, color, white. See, that's doing session breaks. I want session. Show grid. What's up with this? I don't know why it wants to do that, but we'll no. I think I'm just going to make a copy of this. No, you know what I'm going to do? I'm going to copy one that will fix it right in front of you. I like that one. I like that. So I'm going to copy this and paste it, and then I'm going to put in the Aussie so we can see it better. AUD dollar. And AUD again. And then close. And you can see here, it's let's see, the Aussie, what was the Aussie doing on the other one? Let's go back to that, because now that's not even remotely doing it. Where's that at? There it is. So the weekly here is trying to tell us that, oh, it's a, I see, it's a 3.5, that's why. Let's see what that says. And the blue is the plot 6. So the plot 6 is trying to climb. Now let's take a look at the one I just did. See what the weekly is there. Activate. Yeah, see that? It's invisible. So if we make that uninvisible, put a line in it, and make it a histogram, it's probably trying to lift up. Yeah, right there. If we make that green thickerish, enormously thickerish, like that. There we go. You'll see it. It's trying to lift up as a plot 5. It's trying to get going. We'll see. I'll keep track of that. But I usually follow. I'll do some research to see if, yeah, see, the plot 5 went into the cell earlier too. Look at that right there. Maybe the euro has changed. I'll have to check that out. Maybe the volatility has shifted in it. I haven't paid attention to it that closely. I should. So, actually, let's go back and look at that. So the weekly, yeah, see, it held out a week on the opposite side of this on the upside, and vice versa. Went into a weekly sell earlier. And let's just take a look at what's it? That's Aussie. Okay, so let's see, which Aussie are we looking at here? So this Aussie right there, then go into the sell until here, which is what, the 611, and then on a gas line 5. Where's 611? There's 6.4. There's 611. So 2 weeks. Interesting. But either way, it was a good top. It caught it either way. I mean, that's pretty cool. I'll take a look and see if it has to be changed, but I doubt it. I'm sure it's fine. But it's always interesting to see. Yeah, how about that Aussie? I was surprised when I saw it go into the sell 2 days ago. I was really surprised about that. Let's see what else can we say about the Aussie. think that's the Aussie we're looking at right now. So yeah, and then Aussie in the gas line 3 is battling it out on the upside. Let me just double check this one here. Same situation, because it's gas line 3, so that's fine. Yeah, you can see that it's trying to battle its way up. That makes sense. I don't know, you know, the fundamentals really make things really hard to appreciate the action in them. You know, when you see interest rates rising in a particular country and they sell that currency at the same time, it's like, what? Why aren't they buying that currency for the carry trade or something, selling it? Well, I guess if you sell it short, you know, for the carry trade, or is it buying it? I think you buy it, right? And so for the carry trade versus the local currency. Lockdown cause of COVID. Oh, I have no doubt. The COVID has not been governed by science, that's for sure. COVID has not been governed by science. That's a sad thing, but true. Very sick, you know. It's been politics more than anything else. All right, so we've seen Euro and cable. We've seen the Aussie. Anybody want to see anything else? And then we just took a look at ruble, and that ruble is trying to do a little turnaround there. And then, let's see, what do we got going on here? Let's take a look at South African Rand, another product that seems to not follow in its natural footsteps. So you can see here the Rand is sideways enormously. And we've been seeing gold of late the same way, really. There's gold sideways. And when we look at silver, sideways, it's almost like the Rand, totally sideways. That's really, you know, the silver's just been locked. Yeah, it seems to be lethargic, you know, the South African Rand. Definitely lethargic right there. I've got a big box going on it now. It seems to be stuck in some type of range. And you can see the gas line 3 has been kind of tight with it also. You know, it fell down into here and then basically locked itself into a soft range. What's more curious is the weekly is taking off all of a sudden, which is really hard to believe. But, you know, maybe that's what it needs to do, is take off a little bit to top out. Let's see, when's the last time it was at that high up? That's a pretty high area where it's at right there. Back in August of last year, and you can see here, it was even higher at one point. Not that interesting. We don't have charts to it, but maybe we do up in here and we're just not seeing it. Figure like that. That even made it even weirder. There you go. Well, that's the South African Rand, which is kind of surprising, you know, just with the strength in the metals of late, even with us in the weekly sell. The South African Rand doesn't seem to be moving at this point. It seems to have weakened and turned into a plateau. All right, who's next on this hit parade? Oh, Mexican peso. Let's see what the Mexican peso is looking like. And you can see here it's breaking down a little bit, just as it started to pop up. Now the weekly is really, really close. I put an RSI in there for somebody last week. Let's see, George says, Doc, your morning quant on bean oil has the weekly turning up and circled. Can we look at that? Oh, sure, George, no problem at all. I left that page up too. Let's see, which bean oil are you talking about there? Let's see, bean oil. So let's go to, I guess it's deck bean oil. There's deck there. So yeah, that's not turning up, no. How about, there's Jan. Ah, there you go, Jan, I can see that now. Okay, yeah, look at that, isn't that something? Making a little bounce there. I saw that too. I should have wrote something on there. I saw that March and March is even more firm. It just shows the back months, you know, is not as weak. Now it's going to be interesting. If this thing closes in a weekly sell, you know, does that tell us that we're just going to be sideways down? I would assume so. You can see most of the complex in general, like soybeans, you know, it's doing the same thing. You know, corn doing the same thing. Wheat can't get out of its own way. It's, you know, it's been that way for, what's that, 6 full weeks going on a 7th week? 3, 4, 5, 6, 7. And so, now that George, you know, that makes total sense. I'm glad you pointed that out. I meant to write something on the chart there this morning about that. I should have. That's my bad. Let's see, where is it at? Let's go back to that. So the 2 back months are trying to show a little life. Let's try that again. The 2 back months, like as if it's listening to me. And trust me, I have tried to get these computers to react to voice. I really have. And they just don't want to. You can see the red dots are giving us warnings. We're getting another volatility noise again here, just like we got there, and we got, well, there's a bunch of them on this one. Look at this. 2 here at the top. Then you got one here, you know, after this sell, and it still slid down. Now we're getting another one, and this thing's turning up. It'll be interesting to see how this plays out over the next 2 trading days. But at this point in time, it's telling us that the price pressure is on the downside. Debt oil, let's see, let's just double check that, because I think I just looked at that. There's DAC, and it's still rolling. Oh, wait a minute. Oh, that's the 8th. Okay, what happened? Where'd it go? Yeah, let's take a look and see what we sent out. Where is it at? Right there. Yeah, it's doing the same thing there too. Okay. That's what we sent out. So it's trying to lift up also. Well, you know, if we go into a weekly sell and a daily buy, it's telling us one real clear signal, and that is neutral. That's what it's telling us. You know, that's just like what we looked at here with the. Let me show you the good example of that. If it happens, we'll see if it happens by the end of the day. But let's see, where do I go? Minimize that. I guess I should close that if I can find it again. There it is. Let's close that, and let's put this chart back up there. Look at crude oil. Crude oil is a good example of this type of noise. So you get, you know, you're in a weekly buy, but this thing keeps on throwing red dots, and the histogram is minus for, you know, a bunch of days here. And sure enough, it finds a way to park itself down there in the end. Now it's trying to get into a daily buy as we speak. So, you know, sometimes the math picks up things, and it, you know, not sometimes, most of the time, I'd say 8.5 out of 10 times, the math picks up something. You know, George, it picks it up, and we look at it and go, this doesn't make any sense. But if you look at it in the fashion of the math knows and we don't know, then it makes total sense. In this case here, I was saying, and I drew circles, and I kept on saying, well, it's just telling us to be neutral. So be neutral. You know, there are times, if you're a provider or a producer, there are times where you can't be neutral, right? You got to have something. But if you have inventory, and let's say you have 2.5 months of inventory and you sell this product, then there are times where you don't buy. Let's say your policy is to have 2 months, 3 months of inventory that you're selling, okay? And so now this is just like a provider, like someone who would be selling oil or, you know, crude oil or creating bonds, creating mortgages, or creating a supplier of coffee or something like that, or supplier of wheat. And in this case here, the oil, in the sense of crude oil, was screaming at us in the math, don't get long, okay? And right here, everybody that watches the webinar knows that when we're in a weekly buy and a daily buy, you can get long, and the odds are 8.5 that you're going to make money. And sure enough, the thing is trying to go up, and we're getting red dots, and the line's dropping minus right here, and it's like, what is that? You know, the math obviously is wrong. It's like, no, the math is much smarter than us. You know, that's the whole thing, is the math is much smarter than us. It's right way more times than I am. And so it's telling us, be neutral, right? So 4 days goes by, 5 days go by, and then you're like, oh man, you know, we're in a weekly buy and the product's going from 72.91 to like now it's trading at 76.22. Oh my God, I gotta be long, I gotta be long. And the math is saying, I'm smarter than you, don't be long. And then what happens? It falls apart over these last 3 days, right? And I can tell you, I know traders that have been following my math for 40 some odd years, and they're like, I just follow the math. I just follow the math. You know, I just follow the math. That's it. What I want to think and do is I just don't, because it's so much more right than wrong. And so that's probably what's, now we fast forward to your question again. Let's go back to that. Right there. We go back to the bean oil, and so it's trying to do that. Matter of fact, let's see why is it giving us the 8th? Let me give it a refresh. It's still the 8th, let's see. There we go. And so today, it's trying to turn up, right there. There's today, right now, live, and so what it's trying to tell us is that we're going into a weekly overall trend. The bigger money is telling us that they don't want to buy this at the moment. That's what it's telling us, and so you have to heed that warning. And so just remember, Doc lives under 3 premises: long, short, and neutral. And it's trying to tell us right now, be neutral. And don't try to outthink the math. Now, as a provider, if you're, let's say you're a farmer, and you're farming, you know, bean oil, or you're farming soybeans, right? So, if you're trying to hedge your soybeans in, you know, because of the quantity of what you have, you know, and maybe someone buys it from you to squeeze. And so, you know, maybe they follow the spread or whatever. In the end result, it's telling us right now, don't get too excited about it on the upside. And it still hasn't even gone through the buy. But what it is that there are times where things go up because of why? The marketplace is shorted and someone takes profits and it goes up in value. It doesn't change the overall trend, it just makes it firmer at the moment on a shorter term basis over a few days. So that's what it's trying to tell us right now, and that's the charts talking to us. You see what I'm saying, George? That's the charts talking to us, and that's what you really want. Matter of fact, that's what's kind of neat when you look at our algorithms. You know, the gas lines and the gases and all like that. When you get this green line through the time manifold, it's telling us that they want to buy this much more aggressively. And when it finally breaks down right here, it's not in the sell yet. But it's you know, it takes 2 days, it goes into the sell. It's got a volatility signal, so you can't take it. It lifts back up again, you get highs again. You're not getting short in here. And you can't get short in here. And finally, like here, it's crazy. It gives you a green dot. You know, this thing's minus. You can't get short. Next day you're thinking, maybe now I can get short. Thing pops up again. Finally, right here is where it allows you to get short. But again, that's only because the weekly is now underneath the 0, so it's a very short-term play. Now, if you're dealing with trades that are going on for months, you may just want to stand it aside. If you need to buy bean oil, maybe you choose not to buy bean oil because it's been playing the time manifolds have been minus, and there's lots of red dots, and you know, and at the same time the weekly is curved underneath the time manifold, and now is below the 0 line. And so it's telling you, it's warning you And so there's lots of neat little nuances. That's why I've been playing with this lately. Let me go back to that. Where is that at? I think I put it in here. Where we were looking at the Aussie. I was looking at just the gas, not the gas line. So I'm looking at the time manifolds, double time manifolds in two different time frames. And so, you know, it's giving me a warning here. Look at this thing. It's parking itself on the 110 strike price. Thank you, Alan. That was really cool that you pointed that out. And so, hey, there's Samantha. Samantha? Copper prices, please. Oh, I'm so sorry, Samantha. I was tied up with George in the article there. Let me see what George says, and I'm going to put copper up for you right now, and let me just reread, making sure I answer George. I like to answer everybody in line. So there we are. So let's see. There's copper to start off with. I'm not looking. I want to finish off George there. Yeah, I understand. Both weekly and daily moving in the same direction. I think it is what you're saying. Yes, exactly. And it all comes down to how you use the products too. Be it copper. Let's go to Samantha as an example. Imagine if Samantha owns an electric car manufacturing operation or some type of electrical device operation, and Samantha is thinking, is it Samantha? It is Samantha, right? Samantha. Yeah. Okay. Levinsky. All right. So like if Samantha is involved in dealing with copper. And then here's copper. Copper is acting really well today. See that right there? Sorry, Samantha, we had you waiting there. I wanted to make George understand. I wanted to make sure I made it clear how to read the charts for George to be able to enjoy the accuracy of it and what it's telling us, nuance-wise, and everybody gets a chance to see that at the same time. Now, here's a good example for Samantha. Been in a weekly sell. Excuse me, there. Been in a weekly sell from up here. Up in the 460s area. Then it goes in all the way down to 412. Okay, so it drops like 48 cents. And you know, and every time it gets a daily sell, there's pressure on it. And that buy you can't take. Why? Because we're in a weekly sell, so you're neutral. Then again, you can get short here. Unfortunately, you don't catch that. You don't make a lot of that money, but if you're a manufacturer, one thing's for sure, you're not going to step up and buy copper at the moment here. And you'll still be waiting for copper to go down in value. So it's like the flip side of that. Because you need copper to manufacture these electronic devices. And so as a manufacturer, you tell the inventory people, don't buy that copper for $4.40 an ounce. Or a pound, I'm sorry, $4.40 a pound. Let's wait a little bit longer. Doc's math is pressing down on the weekly. So don't do that. Okay, now as a trader, if you're just flat out trading this thing, oh, you're chomping on the bit. You want to get long. But no, it's telling us that there's problems here. If you have options on and binaries, you're riding this whole thing down. You're riding that whole thing down because you're not going to get stopped out with a binary or an option. See what I'm saying there, Samantha? And see, George, see what I'm talking about there? It all depends on how you use the underlying product itself. Then you can use these charts to read them even better. Because, you know, you call inventory and you go, you said you were going to go buy that shipment? Hold off for another couple days. And you're like, you know, the guys in inventory are like, why, man? It's down from 480. You kidding me? I was going nuts at 480. It's down at 440, 439. It's like, you know, it's 40 cents cheaper. Let's buy it. And you're like, no, I'm watching Doc's math. And Doc's math is saying like, no, still stand to the side and let it slide. See how that all works? It all comes down to if you're an intraday trader or a daily trader or a weekly trader and you have no relationship to supply and demand. You're not trying to supply. You don't have to bring it into your factory to manufacture with it, or you're not, and think of it the other way around. You're, some type of little mine somewhere, and basically you're saying, push it out the door. Get it out the door at 460, at 450 and 440. Sell it. Sell forwards on it. You're like, let's get rid of it. Let's sell it right now. Doc's math is rolling over. And so then everybody's still in the mines and strip mining or whatever, and they're mining it every day, but you've sold it already up at a higher price, like 40 cents a pound more. Hell, you're going to dinner now, and lunch is feeling pretty damn good. So I hope everybody's catching that. It's a way of reading the nuances. The math really loves to tell us the math really loves to tell us what future events are going to be. It really does, and it's really insane. I'm going to tell you a really crazy story, and I have all the physical proof to this day. One of the largest option trading specialist units out of Amsterdam and the New York Stock Exchange, and basically the world at one point. A buddy of mine had put my math into their computers because he was a specialist, and he had to run lots of markets in the option side. So he puts the math up on their P&L spreadsheet every morning, right? But he doesn't tell anybody what it is. This is like in the 80s, in the 90s. And so he shows me, he goes, look at this, I programmed this in to our mainframe so that I could see what to do when the sheets come down, because I'm following like 90 products. Like he was a specialist in something crazy, 60, 70 products, something like that. It was crazy. And so, that's 60, 70 different stocks, and not counting the fact that he's the option specialist. So that means, good Lord, there's thousands of different things he's watching. And so, the different strike prices and all. So nobody pays attention to it because they think it doesn't make any sense, because it's making 62%, 95%, 130%. It's showing how much he's making, and he's making millions, and everybody's giving him kudos and how brilliant he is over the years. And he says to me, Doc, he says, it's amazing. I've got it programmed in there, and no one will watch it because it's making too much money. It's like, yeah, I know, I hear you. And so that's one of the funny laughs I can get out of life, I did that for Ulysses, made hundreds of millions for them, just following the math, hedging the other side of the portfolio. Every time I would stop in that office, it was so funny. Jack Nash would find a way to stand in the same room with me, but not talk to me. I always found that odd. He was a funny guy, and so didn't want to talk, but he wanted to stand in the room with me. I'm in sitting there taking care of something. So it's just the way the world goes. It is. It's just the way the world goes. And so it all comes down to how you need to use the math. Because when you're a provider or a producer, or let's say you're just a farmer trying to hedge your crop, basically you can go buy binaries and buy put spreads, and you can do all kinds of things, and you can be up in that tractor, or you can go to bed at night not worrying that you put out X amount of dollars, and what happens if the prices collapse? You can hedge yourself. You can just go out there and put some simple hedges on. You can go sell some call spreads or call binaries up top to pay for the put binaries or put spreads below. Put it all on for free, put that insurance on, and all you're doing is basically, free in cash. And then what you're doing is you're only giving up a small part of your profits if it runs on the upside, and you're locking in your profits, to a certain extent, depending on how big the width of between the strike prices are on the bottom side. And so it all, the math, trust the math. The math is always so much better to trust than, the fundamentals. Janos has made that. I know I'm always talking about that. Janos is probably sick of me talking about it. He created these videos on how to trade fundamentals in this era since quantitative easing and so forth, and how hard it is, and how unrealistic it is anymore. And whereas quantitative mathematics, my particular quantitative mathematics outthinks the marketplace. It's kind of like looking at a Hamiltonian, or using a Gauss, or looking at any other advanced mathematics, trying to understand where something's going to be. Max Planck's uncertainty principle, quantum physics. It works the same way because it was built to do that. I created it at the time in the 70s to stop from hoping that they would not put money into accelerators and CERN, because it was tokamak in Princeton first, then in Texas, then CERN, and then we've gone $18 billion and we're not finding anything out any more than what we already knew in 77. We knew there was going to be a Higgs because they started the formulation to be a Higgs back in 68. So, I mean, we knew that the Higgs was going to be found. It's like, what a redundant concept that is. So, all right. Have I made myself understandable? Everybody got a good feel for how diverse these charts really are? So it satisfies the intraday trader, it satisfies the daily trader, the weekly trader. It satisfies the providers, producers, the growers, the people who need to buy this stuff, the people who need to sell this stuff. I hope I've answered all those questions today. I guess that's about it. All right, everybody have a safe and a smart weekend, and we will catch everybody on TGIM, which will be, thank goodness it's Monday. Alan, thank you very much. And Samantha, thank you. And George, thank you. And Moses, thank you. And I'm just, I'm just happy that people jump in and we get a chance to talk about different ideas. You open my mind. I would never have that discussion if you didn't ask the questions. And it's boring if not talking about the real stuff, I like a friction world. So, anyway, happy trails to you until we meet again. That'll be Monday. Happy trails to you, to all my Dukascopy friends. Ta-ta for now, traders.